but the rest of the world is raising a lot of corn. A lot of that happened back in 2014 and 15 when we had $5, $6, $7 corn. The whole world started raising corn and they haven't backed off. So here's our March corn chart. This is the nearby corn chart. March futures is December went off the board yesterday, so this is the March corn chart. As you can see, we're at the top end of it. I think $2.36 or 7 cents was the high, or $4.37 is the high we've seen so far in March. We're about a dime under that right now. So thank you, Jeff. Thank you. As you can see, we see a little consolidation going on. The big question is, are we going to take out that $4.37? And what's the answer to that? Well, I believe we will. We're seeing basis levels historically high right now. For the last 5 years, you can see basis levels in St. Louis is between 15 and 20 cents over the Board of Trade. Right now, we're trading that thing at 37, 38 cents over. We've seen as high as 42 over Austin the last few weeks. So basis levels are really, really good. Really, really strong demand out here. So, and I told you a while ago I want to look at that 91 million acres of corn. So if you go back, we got corn and bean acres both stacked on top of each other right here. 180 million acres is what we had in 2017 and 18. Let's just take this year and say we do plant 91 million acres of corn, 91 million acres of beans. That would be an all-time record. That'd be 182 million acres. You start putting trend line yields on there, guys, and you keep the demand where it's at today, we will have no beans next year. Okay, I've seen a matrix come out today, and we can have 91 million acres of beans, 91 million acres of corn. Those would be record number of bean acres out there. We would not have a carryout on beans, so we've got a very, very bullish bean market, but we're talking about corn right here. We would see the corn market on fire as well. So we're going to watch this thing very, very closely. We have to have all the acres planted, no pre-man planted acres next year. The monthly corn chart, this thing goes back to, what, 2007. As you can see, in the whole scheme of things, I guess we're still relatively cheap. At a 1.7 billion bushel carryout, we shouldn't be trading corn as cheap as we are right now. $4.30 corn shouldn't stop this corn market right now. I think the next chart shows you what the highs have been every year since back, this is about from 2005, 2019. Each one of these arrows represents a high of the year, the marketing year. So 14 out of the last 15 years, the market has set highs in May, June, July, and August. Obviously, this is not May, June, July, or August. So I'm still very, very optimistic. We've got a good future ahead of us in this corn market. I think we could see a 5. We will see a 5 in front of this corn market before it's over with. We've had no issues. Obviously, we're not trading any weather in the U.S. We've got issues in Brazil and Argentina with the La Nina going on right now. So I think you'll see a 5 in front of this corn market.
Okay, so here's the question. With regard, is it going to be predicated by the weather in the southern hemisphere, by a sudden push in terms of demand? And I'm thinking about the crop insurance prices established in February. So if we're looking at timing of when this thing is going to bump, if it's going to bump, what's more likely, or what does history tell us?
So history tells us it's probably going to happen in May, June, July, or August, and that's due to a U.S. weather problem. That's what that is. But we're seeing great, great demand. We'll have some Chinese slides coming up here a little bit in soybeans, but it's going to come from the demand side, I think, and not the supply side. We've got Brazil and Argentina weather obviously looking at us, but we typically have a weather rally here in the United States, and whether that be acreage rally in March or it comes out with a hot, dry weather in June or July. But not really, I trade every crop as an average crop going into this thing. I'm going to say we're going to have 91 million acres of corn. Trend line yields next year are going to be about 100 and probably 178 bushel the acre, and our carryout won't increase, assuming that happens. So we're going to have some time in between now and then. We're going to run into some weather issues. I'm guessing probably early spring, early summer, we'll see this thing top out. That's when we're going to be heavy sellers.
So if there's going to be a January, February pop, it's going to be something out of the southern hemisphere or the appetite from the globe.
The demand, I think it'll more likely come from demand. And we're getting far enough along in this crop. Like I said, we have that Brazilian safrinha crop corn to go in there yet. But I think it'll come from the demand side of it. And demand in the U.S. looks very, very good right now. And I'm assuming we won't get into another COVID situation. Not that we've got it under control by any means, but we've handled this thing. We went through it 1 year. We won't see the big fallout on the ethanol industry like we had. So. January supply demand report, that's going to be a huge one. That comes out to about the second week in January. That's going to be huge. If we adjust the corn yield down 2 bushel the acre, that's 170 million bushel more than what we got, or less than what we got right now. That's very possible from what we've seen in the November report. Great feed demand. We're going to see that continue. Uncertain ethanol. I say uncertain ethanol. We see the chart up there. We think ethanol is going to hang in there, not see the dip that we had last year. So we think it will end up the year better than it was a year ago. Good start to export. I should say excellent start to export so far. The one thing that bothers me a little bit, the funds are long, 255,000 contracts of corn. Some people think they'll have to liquidate that by the end of the year. I think they'll ride some of that through there. We may see a little bit of a fund liquidation, but that could be a little bit of a bearish factor between now and the end of the year. The lows were set early. I think the lows are in this market. I think we've got some good times ahead of us in the corn. So, and I think to set the stage for that, we need to talk about beans right now, because I think this is one of the things that's going to help the corn market out as much as anything. I talked about corn being bullish, beans are super, super bullish, and that will lift the corn market up. So, soybean production, obviously you can see we had a fairly decent crop this year. It was the 4th largest crop. No way was it a failure, not even close to where it was a year ago, but wasn't as big as what we thought it was going to be. The average yield this year, 50.7 bushel per acre. Not the final yield will come out in January, but I got that 53.3 up over the star. That is what the yield was estimated to be back in August. So everybody is saying, well, why was everybody projecting beans would be $8, $8.50 a bushel? I sold all my beans back in August, and now we're $11. We even actually hit $12 over on the river. Well, 53.3 bushel per acre is a big difference in 50.7 in soybeans. That's 2.5 bushel the acre on 85 million acres. 400 million bushel less beans right now just because of yield. Why do we have less yield? Dry weather, right? We had dry weather in the month of August and September. Beans are a late weather crop, and we just didn't get the rains to support the yield. So that's where a lot of the rally came from. Yeah, everybody sold beans early this year. I know $10 beans off the combine look good. We sold a lot of beans off the combine. They're projecting right now about 80% of the U.S. soybean crop has already been sold this year for this year's crop. U.S. deviation from trend line yields, we were still above trend line yields. So we got this big rally going in the soybean market. We were still above trend line yields. Now when I say that, we still have the final report coming out in January. What if we lose another bushel per acre off this soybean crop? We don't have it out here, guys. The carryout's projected right now to 175 million bushel. We lose one more bushel off of it, we lost another 85 million bushels. Puts us sub 100, and we can't in the U.S. We found that out a few years ago. We lived with it, but right now it's a 3.8% stocks-to-use ratio. That means we can run 2 weeks into the next marketing year. So when September 1 gets here, we're going to have a 2-week supply of beans on hand. If we lose part of that 2 weeks, we're going to be down to 1 week supply. And that's really unacceptable here in the U.S. We have to have more than that. Soybean crush. Crush numbers are coming out fantastic.